day one of a new week, and was a big reversal of fortune for benchmark indices, which really picked up momentum after a slow start.
Well, hi everyone, and of course we will be discussing all of that momentum and what the way forward is for the equity markets with our three experts who will be joining in today on the show. Rakesh Arora, our Managing Director and Head of Research, will be joining in from Macquarie Capital Securities. There's Nipun Mehta, Founder and CEO at Blue Ocean Capital Advisors, as well as Sandeep Wagle of AppTarIndia.com. Nipun, wanted to know your assessment of the market momentum at this point in time, because as we are seeing, there has been a marginal recovery, at least when it comes to the inflation numbers. So on macros, things seem to be turning around. But most of the experts believe that everything pretty much hinges on the outcome of the overall political environment. Would you concur?
Yes, for sure. I think that's where all the eyes are on. Clearly, as you start seeing maybe opinion polls start coming by, even as the dates are probably announced for some time in April and May, you'll start seeing those opinion polls come by. You'll see a lot of political noises that come by, and that's something that's going to turn market sentiment towards gradually. But even before that, I think the results are the key. Not much has been expected out of the December quarter results. Whatever we've got till now have been fairly decent, in certain cases positive surprises. But I think what will now come about as the tail of the results, or the middle part of the results and then the tail, is something that's going to be key. If the results come out to be better than what they are expected, and like I said, not much has been expected out of the December quarter results. If they're better than expected, you could see a further rally coming by. But beside all this, I think clearly a range has been created as far as the market is concerned, with a 200 point on the Nifty between 61 and 6350, 6100, right. 6150, 6350. So I think that's where you're likely to be. Clearly, banking needs to outperform. You're not right. Likely to see FMCG suddenly outperforming, results not too positively expected. But I think these one or two sectors critical for an up move in the market.
Sandeep, if I look at the Nifty, you surely cannot complain. A slow start, then we closed at the highest point of the day. But the star sector was IT. After Friday's sell-off, IT today has bounced back, and some of the large cap IT stocks have gained much more than what they lost on Friday. What's going on there?
Nikunj, I am very clearly surprised by the move that IT showed. The CNX IT, I did not expect this kind of a move, very frankly. Having said that, whether one should buy now, that again I am not sure, because I expect some kind of a choppiness. Certainly when one cannot say this as weakness. In fact, I had a sell in a Tech Mahindra in the morning, but I was totally off the track in that sense. Commenting on the Nifty, I still don't get that confidence that the Nifty is out to break out. And we are in that 70-80 point range. 6240 has been a very strong support in that sense. On the upside, 6330, 6340 will act as a very strong resistance, and I don't see that being broken out. And you are talking of Jan end, probably even that may not happen so soon. I mean, it will spend some more time, this 100 point, 150 point range, and 6400 will be a difficult level to cross. 6200 will be a strong support. So in that sense, the Nifty is not going anywhere, but IT is definitely strong without doubt.
Rakesh, let's talk about your strategy on the markets, because your strategy report clearly has the most aggressive target on the Nifty at 7,200. Seem to be very bullish on the markets. So you expect a 15% return from the markets in 2014?
Yeah, it's not too bullish, I would say, because we are assuming a 17-year average for the P multiple at 15 times, and assuming around 16% earnings growth, which is not that, great. So I would say that markets have potential to do even better. And if we get a stable government in May, I think probably the P multiple can expand to 16, 17 times also. So it is based on a base case scenario. I think a bull case is even stronger. And remember that, most people who are looking for any kind of earnings growth driven story, they will be a little bit disappointed. But I think it is a PE re-rating which is going to drive the stock market in this year. And so all eyes would be on election results, which would be the key trigger out here.
Well, the price action was really centered around TCS. If you have to nail it down to one man of the match, no argument, hands down, it's TCS 23.38, not at a 52-week high. But just to put in context, TCS on Friday, after post set of numbers, lost 135 rupees. No one complained, and today it has managed to bounce back. So what it lost on Friday, it has regained that. Nipun, at 2300, would you be a buyer in TCS with the assumption that the stock would still give you 15% in this year?
I think that kind of a high return, difficult to believe, difficult to foresee. But for sure, I think it would be amongst one of the top picks that will be there. We've been constantly talking about IT outperforming the markets, large cap IT particularly, beside of course a lot of the mid cap IT stocks. And we definitely put TCS and Infosys at the top of the list as far as the IT pack is concerned. May not give you that 15-20% return, but for sure likely to be among the top gainers as far as the markets are concerned in 2014.
Nipun, I want to come across to you with Kotak Mahindra Bank and Ashok Leyland and what exactly you're factoring in.
Well, I think in line with what we've seen with what the results for Kotak Bank have been, or what the private sector banks have shown, really, while that uncertainty about asset quality has been considerably lower as far as private sector banks are concerned, I think the NIMs have been maintained, and this entire space clearly stands out in terms of both results, asset quality, NIMs maintenance, NIM stability, as well as how they're getting rated as far as the market is concerned. Probably getting dragged in terms of overall market discounting because of the PSU banking space really not doing too well or continuing to show asset quality concerns. But our sense is, yes, the growth that Kotak Bank has shown, or all the private sector banks have shown, is something that will continue in subsequent quarters as well. And you could see the regular profitability growth coming by. As far as Ashok Leyland is concerned, I think to a degree what we've seen in terms of price movement has been a surprise. Overall, in terms of the commercial vehicle space, there hasn't been a significant change. It's been expected for probably around 2 or 3 quarters now, but we haven't seen any significant change coming by. Our sense is, Ashok Leyland results could just surprise this time for the December quarter, and you could see probably a guidance which could show a different kind of projection in terms of volumes that are expected over the next 2 or 3 quarters.
Sandeep Agle, today we saw decent price action in Tata Motors. Now Tata Motors is not having a very strong path, so to speak. Somewhere, do you think Tata Motor has a trading bottom in place?
Nikul, yes, around 360 I don't see Tata Motors being broken down. On the upside, I don't see it crossing 390, 395 in a hurry. So this 30-point band I see Tata Motors moving in. Not that keen to buy Tata Motors at this level.
Rakesh, let's talk about the NBFC pocket. Does this interest you at all?
Things are bottoming out for the NBFC pack, and what is really worrying is actually what would be the legislation changes which would come in, and that the impact of that on their margins, etc. So and most of these companies are mid-cap companies, so we are actually sticking with the large-cap banks at the moment, and there is value here, but we are in no hurry to really add to these names at this juncture.
Rakesh, for the longest time as the house, you've liked Ranbaxy. But the problem for Ranbaxy is that the news flow is still very, very volatile.
We have been bullish on this name from around 300 rupee level, and at 450 we thought that the risk-reward ratio, given the news flow, is turning slightly against us. So we've turned neutral on it. So we're not saying it will sell. It's a neutral for us. And probably at low levels we'll look to buy again. But yeah, we need to figure out what this 483 is and how severe it is. The key triggers which are going to come are the new launches, and which I think they're adequately prepared with alternative sites. So I don't think new launches would be stopped. But, after the sharp run-up from 300 to 450, I think the stock will consolidate till we get clarity on 483.
Let's nail it down to individual stock recommendations. We start off with Poonam. She joins in from our research team to tell us what exactly the dealing rooms are talking about. Poonam.
Well, one it's picking up Cholamandalam Finance, a buy on that from a very short-term perspective. The third quarter results are likely to be decent enough. Profits are likely to be up nearly 17% with a strong Kanhaiya growth of over 30%. The stock is up nearly 14% in the last 2 weeks, so be careful on that. And it is trading at still reasonable valuation, 1.4x on FY15 price to book. And this management is going very slow in terms of the disbursement, especially on the vehicle finance book, but the home equity finance book is doing reasonably well. The second stock is, of course, DB Corp. We have seen a very good set of performance on the results. The ad revenues are likely to be strong further ahead owing to the elections, and the company has very strong leadership in the Madhya Pradesh state. Also, the brokerages remain very much bullish on